Hello, everybody. Welcome back to the channel. Hope you're having a great day. Today, we're going to go over the dividend portfolio. And before we get into that, some news. A lot of people are feeling some financial squeeze, and it looks like some job market data wasn't great. There's some pressure there, but I want to look at passive income with dividends related to not just long term wealth building, but what is going on with everything. So we have this article here from CBS News. More Americans are turning to buy now, pay later loans to purchase groceries. And it goes on to say that from this survey, people using buy now, pay later loans, not just for things that they want, but things that they need, like groceries, is up from 14% last year. And with the rate of inflation on everything, including groceries, it's getting harder and harder for people. And this is that lending tree. Um, People using short term loans for groceries, 25% of buy now, pay later using for groceries. This is not sustainable. I heard about this, people using it with DoorDash too. So that is the news. The market is up today. And as we get into this, this is not financial advice, but we're going to look at a few things. So I added a new fund to the portfolio. We'll go into the upcoming dividends as well. But I added a new fund to the portfolio, which is right here, SPYT. Small position right now, but that's okay. We're going to build it slowly, like we're trying to do. Well, we're going to build it respectfully. So SPYT is another dividend payer. It's right here, SPYT. I think, let's see, 2025. It's been around for over a year. Um, and I think it's some kind of closed-end fund, which is what a lot of these are. The yield is 21.95%, and the expense ratio is 0.87%. So that's a pretty good yield. We'll have to look for NAV erosion on this, but that's pretty good, a 21% yield. And on the 5 year, year to date, I think this will be fine. Probably won't be our biggest position or anything, but it was cool to find this, so I got a new position. Here, I want to show these are the returns for all of these funds overall. So QQQI up 2.19%, JEPQ 2.72. MSTY, this is great. We knew that this was a riskier fund. It's up 5%, and this might move more than the other ones in both directions. SPYI 2%, YMAX 1.2, Clause 0.2, which I expected this should move the least out of everything, and JEPI 1.3. So that is the returns for everything that I'm holding so far. And you might look at this and say, well, there are other stocks that have gone up 60% in the last month and things like this. But remember, this is just one strategy. This is part of a diversified portfolio, and this is one type of investing that has where you're not having to trade, you're not having to it's generally considered like a lower risk situation, where you're less likely to lose it all or something. These and but it is probably good to be diversified into many different things. So this is just a dividend portfolio, and I read something a long time ago, which was, well, first of all, you should try to understand what you are investing in. But secondly, that investing strategies have more to do with your personality, than a lot of other things. Because a lot of different things can work. So, how do you choose how to split them up? Well, um, if you're balancing that risk with, what makes you sleep at night, right? So you could be chasing trades and chasing stocks that do go up 60% in a month and stuff like that. But when you enter those positions, can you sleep at night? These are all sorts of trade offs and balances that people need to think about. So I just set these, and I think that the psychological effect of receiving these dividends. So I'm going to show you, these are the upcoming dividends for, um, because I might not be making a video for a little while, I wanted to show this. These are the upcoming dividends for tomorrow. I'm making the font bigger. So this is 6/21. I also want to show that you can track this stuff. Obviously, I'm making these videos, but you can track this stuff pretty easy and not have to get too nerdy with it. Some of the stuff that I've done is I'll just, make some conservative like generalizations. So for tomorrow, I've got 621, 544, and 854 coming in. And there's dividend tracking websites, and there's dividend tracking in most brokerages and portfolios. Robinhood is not the only portfolio, or excuse me, brokerage that I use. There's another brokerage that has a much better dividend tracking system. Robinhood just gives you this like printout thing by month, and it's not the greatest. But the psychological effect of seeing these come in is what is very cool about this. So 621, so we're going to put these in, and I updated the spreadsheet for myself and everyone. It was kind of like the wrong way, so I had the months going down and the dividends going across. So this is probably better, and we'll get to make some like charts and stuff from this too. And you may notice I'm not even writing in what fund these payments come from, because that's just extra work. It's not needed for me right now. I think things are going to be fine. I could always pull an Excel sheet and figure all that out if I needed to, but we want things to not be too heavy lifting here. So 621, and we are in July now. 544 and 854. Wow. So we'll change this to dollars. So in July, of course, this is pending. So this is coming tomorrow because it's not tomorrow yet, but that's okay because I'm still want to just show what's going on. So already in July, of July 3rd, I wonder if any of these came early because of July 4th. The markets are shut down. I don't know. We've got $20 coming in. Um, that's already more than April, already more than all of April, already more than all of May, which that is super fun to see. We'll make this green because it's our current month. So we're doing July, and so far, I know we're going to beat June's 64.82. That's for sure. How much more we'll beat it by, not sure yet. And then let's see, this one is the sum. Let's see if this will sum these. E5, F6, Excel stuff. I think that's right, yeah. So, our total for the year so far is 109.52, and we're going to watch this grow. And this will be fun once we put it in some graphs and stuff. Watching these graphs go up and curve up, and you know, these things can start to go towards $20 already in July. These things can start to go towards basic necessities and stuff. Right now, I'm just snowballing everything in. But if you don't think that inflation isn't so inflation is always going on. We heard about it a lot in the last couple of years because it was higher than normal, right? Um, Inflation was it's normally supposed to be around 2%, which people debate this all the time, whether that's the real inflation or whatever. But either way, that means that the money that you're holding is getting devalued by 2% every year. And we heard about it a lot in the last couple of years because it had ticked up beyond the 2% target, 3%, 4%, 5%, 6%. But what they don't tell you is when it gets back down to a quote unquote normal 2% inflation rate, that still means that goods are getting more expensive by 2% every year, right? So if you aren't getting a raise of 2% a year, you're not keeping up with the baseline, which a lot of people think it's more than 2%, and the 2% number is sort of a lie. Kind of agree with that, but if you're not getting a raise of 2% every year with your income, you're not even keeping up. If the money that you're saving isn't growing by at least 2%, you're not keeping up. That, in my estimation, is why we're getting more and more headlines like this. Buy now, pay later. 41% of buy now, pay later people in the last year are using this not for things they want for fun, but for groceries. Frightening. You probably heard of Affirm or Klarna. According to the survey, which I don't know how big the yeah, we'll read some of this. Have you ever used buy now pay later service like Affirm or Klarna? 51% no. 15% once, 23%, which is larger than the once, 2 to 5 times, 6 to 10 times, and 4% more than 10 times. This was just of 2,000 people. Not a huge sample size, but um, the 50% is probably relatively accurate. Um, the younger you are, the more likely you are to have used one. 64% of Gen Z say they've used one. Only 29% of baby boomers. But baby boomers use credit cards probably more. So, I don't know, guys. This type of stuff makes me want to live more frugally, try to save more, at least for a period of time, because the money that I save can roll into this type of passive income. That's why the funds that I'm choosing, I want them to stay relatively stable. Everything got this tariff dip, which you saw I started this at the beginning of April. Um, so I didn't quite get a big advantage on that, but you go through these dips, but I want, if I was able to like draw a trend line through this, like something like this. This chart, this 5-year chart, understand it's if I was able to draw a trend line through this, that averaged out the ups and the downs, we want it over time, over a long time period, to just stay nice and steady. Obviously, there's options. SCHD, I've talked about before, the yield is only 4.97% on this SCHD, but it's really popular. I think there's one SCHG. Let's see what this one is. Oh, the yield is a lot less on this. I don't know why people talk about this then. Um, this one has a lower yield, right? 4% per year, but it's designed to trend upwards. So, which it's done. I think it went up 4% in the last week or so, 4% in the last month. It's still down from the last 6 months. So, um, but I'm not trying to trade. I'm trying to just hold high yield funds that will stay steady. And the likelihood I will add some SCHD to this portfolio is pretty high. And it might be nice to get a dividend from like one more variety of things, but the main other news is that, yeah, we added, let's see if this will go back. Yeah, we added SPYT. That's the new one. Very small amount right now, but we'll be growing this as well and balancing all of these out. So that's the news, and let me know if you get motivated by seeing these dividends come in week by week. I think when I think about my saving and what is the purpose of saving, and it can feel heavy, it can feel hard. Um, Opening Robinhood today and seeing you've got $20 coming in tomorrow. Like, obviously, they're just going to automatically reinvest for this time being, but opening that app, saying, hey, you've got $20 coming in tomorrow, that's pretty motivating. That made me want to look at my budget and be like, wow, can I buy more? Because in 30 days, I want to open it and I want it to say, you've got $40 coming in tomorrow, right? So, hey, share this video if there's someone you know who is wanting to start a dividend fund, or let me know if there are any funds that you use that I should check out. Otherwise, have a great day and see you at the next video.